Right, so what's up, traders? So I just realized that most of you have a problem with taking counter trades, and I just want to show you how to capitalize on counter trend moves, which are opposite of trending trades. So basically, this will be beneficial to somebody who is not able to wait for so long until the market retraces to their point of interest to align with the major trend. Now, I'll also show these particular moves with at least 1 or 2 pairs. So yeah, so I hope that you enjoy this particular video. Now, I just want to illustrate little quick that anytime the market is moving high in an uptrend, the market is making higher highs and higher lows, right? So assuming this is a structure that you have on the 4-hour time frame, or rather the time frame that you trade, then I just want you to know that anytime the market does a break of structure over here and pushes higher, there will always be a retracement that will come for the market to take a break, or rather to take a breather before continuing with the push up. Now, you want to jump onto this particular setup when the market is making this retracement. Maybe probably you've taken your trade and you've rode the upside momentum, which is the main direction of the trend, or rather the major push up. Then you also want to take a retracement of these when the market is making this retracement. Now, this is how you do it. Now, once the market gets to this level over here, you must understand how the market, the multi-time frame correction works. So as the market tries to push lower, or rather to start as the market starts to make this retracement starts from the lower time frame. Before the retracement can be seen on the higher time frame, then it starts from the lower time frame. So figure it out this way. As the market starts to make the retracement, this is what you're gonna see as the last move on this particular movement. So we have the price moving higher, making higher highs and higher lows. And once the market is ready to do a retracement, you will see the trend invalidation from the lower time frame. Basically, what I mean is you will be having constant break of structure as the market moves high like this. But once the trend is coming to an end, or rather when the retracement is ready to take place, the market's gonna do this, break this last higher low, then we have a retracement back again before the market can start doing the retracement. Now, this is the kind of move that you want to spot on the lower time frame. You want to see the lower time frame structure behaving this way, as I have already explained. Having done a change of character here, then a minor retracement then before the market pushes lower, or even you can give it some extra confirmation by waiting, probably the first after the change of character, you can wait for the first break of structure, then you can take advantage of the next lower time frame retracement, which is gonna be the second break, the first break after the change of character. Sorry. So you're gonna have the market doing like that. So you're taking advantage of this retracement that's gonna be happening here. Then you want to probably take your entry here, stop loss here, then your take profit on the next key level. So again, what you need to be careful is that always, as the market makes this retracement, you don't want to take your positions when the market is below the 50% move. So that is a key headline, or rather rule on this particular counter trend moves. So you don't want to take your counter trends once the market approaches the 50%. So you always want to take your counter trends as the market is on the extreme high levels. And how to know the market is changing the trend? You're gonna go down to the lower time frame. Myself, I'm using 4-hour time frame and 15 minutes time frame. That is the multi time frame analysis. So you want to look for this structure. You want to see when the market is at this particular level. You want to see this kind of setup happening. And of course, I've already said that you don't want to take your profits. You don't want to target the whole move. You just want to take the trade before and get out of the market before it gets to the 50%, because once the market gets to the 50% retracement, there is a high likelihood that now the market might be aligning. The market might still go deeper even to these extreme levels, but there is a high risk of holding to these extreme levels, because on these levels, which we are calling the discount levels, is where the buyers want to take action again, so that they can be able to ride the price higher. So on these extreme levels, you will also be seeing the particular setup that we're always looking at, which is this. This is our entry model. So this might be happening on the extreme levels. Now let's look at USD JPY and apply the same apply the same model that we've talked about. Now, for instance, once you go to the daily time frame, you want to, for instance, you will see that the market did a break of structure there, and even on the 4-hour time frame, we had our last break of structure from this level. And once the market did this break of structure, we've actually not had any retracement on this particular on this particular pair. Now, jumping down to the 15 minutes time frame, jumping down to the 15 minutes time frame, you will see that at no particular point, let's just get back even deeper. At no particular point on the left here, has the market done whatever it has done here. So you will be very keen. Like, the market has been making, despite being on the lower time frame, the market has been making high highs and higher lows until the market got here. So I want to zoom out kidogo so that it can be a little bit clear to you. So once the market got here, you can see this is our last break of structure going up, and therefore means that this was our protected low. So once the market breaks this last higher low, once the market breaks this higher low, that is what actually confirms the change or invalidation of the uptrend, and it's starting to be seen on the lower time frame. So, and once we have that, now you want the market to break it and do a retracement. You don't want to get into a you don't want to catch a falling knife, because some traders will just see one bearish candle, and then they'll take that particular sell, therefore finding themselves on the wrong side of the market constantly, with the death of 1,000 cuts. So you'll find somebody has taken a loss there, one loss, another loss, because you've taken, every time you see the market printing a bearish candlestick and we are in an uptrend, you're taking that shot. So you want the move to be confirmed, sorry. So you want to see an invalidation of the uptrend, and an invalidation of the uptrend is happening at this particular point where we have our change of character. So once we have our change of character, you can actually, this is what I do, you can actually pull your fib from the top, swing. We have two swings here. So the first swing is here, and the second swing is here, swing high and swing low. So you want to pull your fib from the highest point, highest swing, to the lowest swing, and you want to place your pending order, or rather you can wait for the market to retrace the 50%. Then you want to put your stop loss above the above the swing high. That is again your invalidation point for that particular setup. And of course, your take profit, let's go to the take profit. You want it to be, maybe you can even target a 1:1, because once the market, again, you can remember we've already said that you don't want to take these particular setups once the market is maybe probably this last swing. If you can check this last swing from here to here, this is the last swing that the market did. You don't want to take these targets beyond this 50%, because once the market gets to these levels here, there is a high probability that the market is gonna start pushing higher to align with the major uptrend movement. So I think that is it for USD/JPY. You've already understood what I have already illustrated on that particular pair. I'll again look at maybe NZUSD, which is another position that I am into, and explain the same thing. So once we have our break of structure, you will always expect the market to do a pullback, and of course the market will always be doing a pullback to the to a point of interest. Maybe myself particularly, I'm looking for the market to retest the supply zone. Now you want to go down to the lower time frame. You want to be monitoring the market from the lower time frame, and in particular you want to see once the market breaks the last once we have a push high which breaks the last lower high, and from this NZUSD setup, if you can be very keen, this was the last push down, means that the highest point that caused this push down is this one here. This is the one that did this break of structure, which is again also the last break of structure, which is again a liquidity strip. So and the last higher low is this one. So once we have the market breaking that level, that is when you want to be interested in in taking the counter trend move, because the downtrend structure has already been invalidated. So you want to now to pull your Fibonacci from this level here to the highest point, and you want to wait for the market to retrace to the 50% fib. That is where you place your pending order, or if you can be able to set an alert and jump with the market order, whichever works for you. So you want to get your entry there and your stop loss below the swing. Remember, below the swing, because some guys will set their stop loss like this. Let me show you. Some guys will set their stop loss like this, only for the market to retrace deeper and take them out before the market pushes higher, because the market will always look and seek for liquidity. So that is how you want to place your setup. And of course, take profits. You don't want to place your take profit beyond the 50% of the what? Of the major trend. This is the major trend. Now, you can see, like, this is the major swing. This is a swing, the swing low, swing high, swing low. You don't want to take this market, or you don't want to be so greedy to push beyond here. So at least make sure before the market gets to the 50% retracement, you've already booked your profits and you are good to go. Sawa. So actually, if you are starting out to take maybe counter trends, you can actually capitalize on not 1:2, but 1:1. That will always work better for you, because again, there is a high probability that as the market approaches these levels over here, the market might retrace back, take you out even before. Like, the move can be sometimes choppy. It's not always going to be straight. And that is what has actually been happening in most pairs for this particular week. So if you check Euro USD, that is what I have been trading. It was a counter trend move. I took this first setup here. Second setup here, I was able to take it, but stopped out on break even. USD card is still the same move, and that is top secret in making what? In making your counter trend trades, so that you can be able to take them like a pro. So I hope you enjoyed this video. Please make sure to give me a comment down below. Is the video clear to you? Was the video of value to you? Also, make sure to subscribe if you're new, or if you just came across this particular video, and see you on the next one. Thank you so much. Bye bye.